Hello traders, and welcome to today's weekly market snippets. My name is Timothy Kerry. I'm an educator and market analyst in the financial markets. So, let's begin by looking at what basically transpired last week. So, this is just a market performance, a snapshot. So, when we look at the US markets, we were able to see the Dow Jones, S&P 500, Nasdaq, which were able to post positive gains 2 weeks consecutive. And this was driven by the strong US job report data, which came out last week on Friday. So the Dow Jones was able to gain 1.2% weekly gain, S&P 500 1.5% weekly gain, Nasdaq was able to gain 2.2% weekly gains. So when we look at these indices, the US indices, right now they are coming back into the positive trajectory. So they have really gained since the turmoil of the US tariffs when these indices, or when it was announced, we saw these indices basically lose or turn bearish. So right now we are in the positive trajectory. If you look at the year-to-date gain, the Dow Jones has been able to right now stands at 0.5% year-to-date. S&P 500 stands as positive 2.0% year-to-date. S&P 5 Nasdaq stands at 1.1% gain year-to-date. So but on Thursday we had the markets tank. We saw the markets dip on Thursday, and that was due to Trump and Elon Fed. Whereby we saw Tesla actually lose about 14%, which is equivalent to about 152 million dollars. So in terms of the global markets, the Asian Pacific markets had mixed reactions, and this was as a result of investors accessing the Trump and Xing call. And then we saw the European markets a bit stable with EU tariffs taking progression. And also the European markets were they were boosted by the rate cut for the ECB, whereby we saw the president of the ECB um, um, give such a hawkish stance, which was able to see the euro strengthen against the pound, against the dollar, and also the European stocks, they were able to gain massively. So in terms of the treasury yield, the US 10-year yields jumped post-jobs report, reflecting economic optimism. So in terms of if you are to go deep or look at keenly in terms of the US job report, which was released last Friday, June 6th. So just going into deep it into just trying to analyze its impact. So we saw the non-farm payrolls added 139 jobs in May, surpassing the expectation or the forecasted figure of 126,000. The unemployment rate remained steady at 4.2%. And the April figures were revised from 177K to 147K. So the impact of this is that the report eased fears of economic slowdown, whereby it boosted equities and yields. So we saw the equities, like we have seen, some of these indices, the Dow Jones, the S&P 500, Nasdaq, among other equities, were able to actually gain, and also the yields were able to push, like we have seen the 10-year yield. So, and this basically signals market resilience despite tariff uncertainties. So, in terms of investors' takeaway, so as an investor, as a trader, what you are looking at is that these kind of strong job data, they usually tend to reduce pressure for aggressive Fed rate cuts, which with focus on upcoming consumer price index, that is the CPI report, and also the PPI report that we'll be having this week, I think on Wednesday and Thursday respectively. So Maybe probably now looking at in details Trump and Z call, which I call it which basically signals the trade talks resumption. We are seeing whereby Trump and Jinping held a 90 minutes call. That was on June 5th, which was described as very good. Okay. So the US-China trade talks are set also to resume today in London. So we will be following in terms of what is likely to transpire. Remember, the call was just more of an introductory or more of an a formal way of beginning the talks. But the real talks begins today. And they will be held in London. So in context, this we saw whereby we saw after the call, the news were posted in social medias. There was tension which rose after mutual accusation of breaching Geneva tariff truce, and whereby we saw China's rare earth export caps and US chips restrictions remain contagious. And in terms of market reactions, initial optimism faded as a call yielded no breakthrough. So there were not much breakthroughs. Like I said, this was just an introductory call. It was just a formal way of beginning the talks. And this actually contributed, after the results were out, we saw it contributing to mixed Asian Pacific market performance. In terms of the commodities, we saw gold actually dipped. And so there was mild market reactions as a result of this call that happened on June 5th. Okay. So just dwelling on the same, this kind of a news, just dwelling on Trump, Trump and Elon Ford, which you have seen last week. It was heated debate online, responding to each other online, and it was such a market mover because we saw the markets retaliating, all reacting to the same. So we saw a public fallout between Trump and Elon Musk, which escalated over Trump tax bill, which ends the EV tax credit, and Musk's ex post and Trump threats to cut Tesla, all SpaceX contracts, which made Tesla to tank Tesla shares to dip by 14%. Wiping out about 150 billion in market cap. The aftermath of this is that the Tesla shares were able to rebound 3.8% on Friday, but truth remains uncertain, whereby Trump called Musk crazy and dismissed reconciliation. Also, you remember Elon. As he was retaliating to Trump messages also, at some point he hinted about a possibility of an impeachment. So it's quite interesting how these buddies are falling out. You remember during the elections, they were very tight, very close to each other. And yeah, it's surprisingly anyway to see, but politics, no one can predict whatever might happen next. So for investors, basically, this highlights market sensitivity to social media and policy shifts. And for this kind of news, Tesla investors face the ongoing volatility risk. So it's quite interesting, and we will be following up in terms of what transpires. So, in terms of ECB and BOC, whereby we saw they were able to release their rate decisions last week. So, the ECB, that is the European Central Bank, on June 5th, 2025, they were able to cut their rates by 25 basis points. And when I basically looked at in details, when I tried to dig in details in terms of the press statement and also what the presser from the ECB president, deposit facility is now rate stands now at 2.0%. The main refinancing rate was reduced to 2.15%. Marginal lending rate was is at 2.40%. So basically, inflation forecast for 2025 lowered to 2.0% from 2.3%, reflecting lower energy prices and strong euro. So the ECB signals a potential pause in July due to trade uncertainties. So out of these results also from the presser, the ECB president was very hawkish, and we saw the euro strengthen against the dollar, and also this was able to uplift the European stocks, whereby they were able to gain quite significant. So the Bank of England, that is the BEC, on June 4th, they were able to hold their rates at 2.5% for the second time in a row. And this is after a 7 consecutive rate cut in the previous meetings. So, and these basically for them holding the overnight rate at 2.75%, these they cited tariff uncertainties and what we call and mixed economic signals, okay, and mixed economic signals. So because core inflation being above 3.0%, but the headline CPI at 1.7%, market sees now, market is priced now at a 50-50 chances of a 25 basis cut on July 30th, when they will be holding their next meeting. So the market impact out of this, the ECB cut boosted the European equities, like I've mentioned. The BOC hold a stabilized Canadian dollar, but reflect a cautious outlook. So in terms of key market drivers last week, the earnings report was something to look at. So we saw strong earnings from CrowdStrike and Broadcom, which supported tech sector, though profit taking capped some of these gains. Then the trade dynamics, the US-India trade talks extended into next week. Or basically this week, aiming for interim deal by July 9th. That is also the EU tariff negotiation. Also, they are in a fluid. So the tariff revenue, in terms of tariff revenue, which was also a key market driver, the US collected $22.3 billion in May, signaling trade policy fiscal impact. So, in terms of global economic indicators, when we look at China, we see weak domestic demand, 88% of the economy, which overshadows trade tension. Subdued property cycle weighs on consumer confidence. When we look at the Swaziland, we were able to see the inflation rate move from 0.0% to negative 0.1%. And the Swiss National Bank may intervene to cap strong franc as inflation turns negative. In the Indian market, the robust Q1 growth, there was robust Q1 growth, but softening credit and capex may prompt RBI rate cuts. So, in terms of key news for investors this week, so we are looking at the US CPI report, which will happen on June 10th, and also on June, that should be on Wednesday. All right, that should be on Wednesday. The CPI report should be happening on Wednesday, and also on 11th. And also on 13th, we have the prelim UOM inflation expectation, which is also part of key data that the Fed always look at in terms of determining whether to cut rates or not. So also we are looking at the BlackRock Investors Day, all right, BlackRock Investors Day. So insights into asset management trends and market outlook, which is again very significant for investors to look at, because it will affect the outcome of it will definitely affect the market. Then we have the US China trade talks in London, which takes place today. So progress could ease global supply chains concern, but breakthroughs are unlikely maybe for these fast meeting. So in terms of policy and political shifts, I mean policy and political risk. So there are key things that we are looking at. So we are looking at the Trump tariffs deadline. So remember, the deadline is on 9th July. So, and up to now, there is limited progress on trade deals, with most nations heightening uncertainties. And also the immigration, in terms of immigration process, we are able to see Donald Trump deploy about 2,000 National Guard troops to Los Angeles, signaling domestic unrest risk. And in terms of Elon political shift, we might Elon's poll on X for a new American party could disrupt tech political dynamics in terms of now what is likely to happen. So it's something that we are following keenly as well, basically to see what will unfold. But whatever unfolds, it will definitely have some impact on the markets. So in terms of sector spotlight. So we are looking at the technology. Broadcom and CrowdStrike earnings highlight AI and cybersecurity strength. But when you look at Tesla's volatility, it underscores the policy risk. In terms of electric vehicles, so the removal of $7,500 EV tax credit in Trump's bill threatens Tesla and its competitors. In terms of when you look at the defense sector, China's rare earth caps could disrupt military supply chains, elevating geopolitical risks. So, in terms of investors' outlook, so various opportunities focus on resilient sectors like tech. That is AI and cybersecurity, and firms which are less exposed to trade volatility. It's also important to monitor the CPI and also the PPI for Fed signal, and also the prelim UOM inflation expectation for the USD. It's important to monitor them basically for Fed signals in terms of whether how likely they are going to cut their rates. So when you look at the risks, basically the ongoing Trump Elon Fed, the US-China trade tensions, and domestic unrest could spark volatility in the market. And of course, Tesla remains a high risk play. So what is, as an investor, what strategy are you looking at? So basically diversify exposure, hedge against tariff-driven disruptions, and stay alert for social media-driven market swings. So that's basically what we will be looking at. As investors, in terms of positioning ourselves in the market. So with that, allow me now to push to maybe gold. I'll maybe for more insights, make sure to follow our live market analysis, whereby we are going to do breakdown of analysis of different pairs, gold, DXY, GBP etc., etc. So make sure to join our live market analysis for more details. Okay, so the link for the live market analysis is shared in the description. So thank you guys, and I wish you a fruitful week ahead. I wish you a blue week ahead. So trade cautiously, monitor your risk, and also stay ahead of what's happening in the markets. And these will give you an edge in your trading. So thank you, and